Good morning, class. Good morning, students. Namaskar. I am C. Ankit Sharma again for our last session, which is chapter 3, that is incomes which do not form part of total income. So I believe that you all must be studying very hard. Of course, you are actually working on your notes, your theoretical concept, your numerical concept, everything. So in last class, we discussed about the residential status provision, and I have uploaded the MCQs session, what I take in that session, and I uploaded one more MCQ sheet on the portal. So there are two MCQ sheet on the portal of residential status. One we already discussed in the class, and the other what we did not discuss in the class. So I uploaded with the answers. So please do download it and check it out. So good morning. Okay, fine. So query has been come. You all know the rules of our class now, of course. So we focus on the top topic. We focus discipline in the class. Download the notes, and we will take query session after 30 or 40 minutes. So today I have a query in the starting of the class, which is related to the second chapter, which is residential status. And that is from Parth. Good morning, Parth. Parth is asking, sir, I had a doubt in determination of residential status of an individual in special case number 3. How is income from source other than foreign income determined? So I have told you that we need to check that if any person have total income more than 15 lakh from Indian sources, then special case number 3 is generally applicable. So you should ask, what is the meaning of Indian source income? So if any income arises or earned in India, that is called Indian source income. So what is the meaning of foreign source income? Which has been arised or earned outside India. Okay. Okay, so good morning. Subbu Dubey, good morning. Pooja, good morning. Sandeep, good morning. Okay, Sushil, Saurabh, Niveda, Rohini, Srishti, Kiran, good morning. Sumanpreet Kaur, good morning, good morning. Sandeep, okay. Rekha is good morning, okay. Okay, Sandeep is also asking, sir, if an individual citizen or POIO comes to India and earns 16 lakh from Indian sources last previous year, and he is also a non-resident in previous year, then whether he will liable to pay tax in India or not. Whether he will liable to pay tax or not, now you are answering your question yourself. If he is a non-resident and you have written he has 16 lakh rupees income from Indian sources. So if you earn income from India, then it is irrelevant that whether you are a non-resident or ordinary or not. So in that case, if income arises from India, then it's going to be taxable if he is a non-resident in previous year or not. It does not matter. Okay, so good morning, still good morning. Good morning, sir. Will a person will get MR at 501,000 as below 5 lakh? There is no tax because of rebate. No, MR will be applicable only if there is surcharge. So because surcharge is applicable after 50 lakh rupees in normal case. So in that case, there will be no MR. So if income exceeding rupees 5 lakh, there will be tax minimum 12,500 in generally. Of course, so you cannot say that we need an MR because my tax has been increased from the income. That is not applicable in that case. So your question I have answered, Siddhant. Okay. Okay. Good morning from Jodhpur. Rakesh, good morning. Rahul asking, sir, tell me how to calculate less than 730 days concept. Please, just one example. Rahul, when I took residential status session first class, that means my session number 3. In that session, in the last, I have took an example to make you understand what is how you need to calculate days of 730 or not. So please go and watch that class full. So in the last, I guess 10 or 15 minutes, we have already discussed a question related with your query. Okay. So Rekha is asking, where is MCQ? Rekha MCQ is on portal. So you can go there and download it, Board of Study portal. Okay, so now we are moving for our today notes, and let me tell you that today is a huge topic we need to cover. We will have our MCQ session in the last of today class only. So be ready. You should have a paper, pen, and a calculator, as I've told you before starting the class. Let me share you something, and this is my personal favorite quotation. This is my personal favorite quotation. And I seriously saying you, when I start doing this course, a lot of people come and say to me, why are you doing CA? There is a lot of CA already in this industry. So what we will do? So always believe, if somebody is saying you that there is a lot of CA in the market, you will not go you're not going to earn money, you're not going to get the job, you're not able to get your practice, etc., etc., etc. Ignore them. Just ignore that, because this is the real quotation, what I personally feel best for me. When I start doing CA, I read this quotation in newspaper, and I thought this is actually true in every sense, that it says there is no future in any job. There is no future in any job. The future lies in the man who holds the job, man or woman, of course, it does not matter. So how you explore your profession, that matters. You will find a doctor who is earning 5 lakh rupees in a day, and you will find a doctor who is having same degree and he's not earning 50,000 in a day. You will find a doctor also who might be not earning 5,000 in a day. So the degree, the qualification is same. Then what does matter? You matter actually. The person who holds that degree, how you explore your profession, how you explore your activities, how you explore things, that is actually matter. So the future of anything lies with the man who holds that position, the job, etc. As I can say that there are a lot of CA who are earning a lot of money, and there might be some CA who are not earning that much of money. Even then, we have the degree from the same institute. Then why it's happening? Because of person change. So if there is future, there is no future in the job actually, because job provides the same opportunity to everyone. It's how we explore that opportunity. So this, I'm really believe the real truth behind each and everything. So whenever you pursue any profession, so believe in yourself that yes, whatever is happening, you can explore that profession the way you want. So now moving on to our topic, because we need to cover a lot of provision today. So these are the notes. Okay, Rahul is saying, sir, I was attended that lecture too, but it's confusing. Let's see if I'll have time today, Rahul. I'll definitely going to tell you that problem. So do one thing. Before we end our lecture, like about 9:30 something, do ask this query again. So if we have time, I'll solve your query. Okay. Okay. Other queries I will take, okay, fine, I'll just take the last query from Shant Shri. Illustration number 5, dividend from a Japanese company received in Japan is got added in the income of resident and ordinary resident. How foreign income received in foreign is added in the ROR income? Mr. Shantashri, I have told you when I taught you the provision of incidence of tax on section 5, I have told you that any kind of income is going to be taxable if you are a resident and ordinary resident in India. Whether you are earning income over here, whether you are earning income on moon. So if you are a resident and ordinary resident, all incomes are going to be taxable. Okay. Good morning, Tejaswini from Chikmagalur, Karnataka. Okay, so now moving on to chapter 3. You can ask me your query, whatever you want to ask. But now I'll take the queries after 30 or 40 minutes of our lecture. So this chapter is all about exempted income as well as total income. When we talk about the income tax, that does not mean that income tax charge your all income. There are certain incomes which are taxable, and there are also some incomes which are exempted. Now, exempted incomes are like in two categories. There are some income, those are fully exempted, and there are some income, those are partially exempted. So we can say income may be fully taxable, that can be fully exempted, or that can be partially exempted and partially taxable. So one by one, we will discuss about these. So there are some incomes which are general income. Those are exempted partially or fully exempted. And there are some exempted income which technically related to a certain chapter. Like there is some income which is exempted, but which will be covered in salary chapter. There are some incomes which are exempted, but that is going to be covered under capital gain. So those kind of income, those are partially or fully exempt, but related to a certain chapter. That you will be come to know in those chapter when these chapter will be studies. But we are taking those income, those are generally exempted partially or fully. So income will be, of course, taxable income. If you are earning taxable income, then you have to pay tax, of course. And if you have exempted income, that means you do not need to pay tax on that certain amount of exempted income. As I told you, that exempted income can be fully exempted or partially exempted. So now these are the provision which we are going to cover in today's topic. There are fully exempted income like agricultural income, etc. There are partially exempted income like leave, travel, etc. In partially exempted, there are a lot of income which will be discussed in the salary or other those chapters which are technically connected with these kind of income. So introduction, exemption versus section 10 vis-a-vis deduction on chapter 6. So there is one thing that is called deduction. There is one thing that we call exemption. So exemption and deduction are differentiated. In both cases, we do not need to pay tax on it. But exempted incomes will not form part of your GTI, your gross total income. And deduction will be form part of your GTI, but after that we will deduct that part. So we need not to pay tax on both, but they both have different treatment. If there is some exempted income, that is not going to be the part of your total income. And if there is some deduction, then first that is going to be included in your income, then you will take the deduction like this. If we say deduction versus exemption. Detail of deduction, you will understand when the chapter of deduction will be taken in your class, of course. Exemption is section 10, deduction is section 80C-80U. 80C-80U. So what will happen, like if your income is 10 lakh rupees, and out of which 1 lakh is exempted income. So if your income is 10 lakh and out of which 1 lakh is your exempted income, then I will write your GTI like 9 lakh rupees. So exempted income will not form part of your GTI. So I'll take only 9 lakh rupees and on 9 lakh tax will be calculated. Now let us take an example in the same thing. If you have income of rupees 10 lakh, but there is a deduction under section 80C available of rupees 1 lakh. Then how we will present it? We need to show GTI 10 lakh and then now we less the deduction under section 80C, which is 1 lakh. Then 9 lakh will be your TI. In the same way, this GTI will become your TI 9 lakh. And now this 9 lakh is liable to tax. So in both cases, ultimately you need to pay tax on 9 lakh, but there's slight difference in the presentation that exemption income will not form part of your GTI and deduction will form part of your GTI, but later on it will be deducted. So that was the basic difference between a deduction and an exemption. Exemptions which are discussed under the relevant chapter, I have told you that there are certain exemptions which are related to a specific chapter. So those kind of exemption you will come to know when you will read that chapter. So we will take those exemptions which will not fall in a specific head of income. Clear? In this chapter, we are going to study the provision of section 10, which enumerate the various categories of income that are exempt from tax. Students may note that in this chapter, only some of the exemptions are listed out in the chapter overview are discussed. The remaining exemptions are being discussed in the respective chapters as shown hereunder. So these are the exemption list which you will read in a specific chapter. Like in salary, you will read these lot of exemption. Under capital gain, there are certain exemption. Under income from other source, under clubbing provision, under deductions, etc. So we are not going to discuss the above exemption. We will discuss our exemption from here. Like that is agricultural income. So we will start it from here. That is technically about the agricultural income provision. So in case of agricultural income, there is no tax. When we start reading our provision of income tax in the first session, I have told you that agricultural income is exempt from tax because no state has imposed a tax on agricultural income technically. So I have also told you in that session that generally we think what is the meaning of agricultural income. We say the farming income is agricultural income, but that is not exactly the meaning of it. Farming income is agricultural income, yes, but there are certain more activity and those activity will also considered as agricultural income. So if you are running, if you are doing, if you are operating any activity which we are going to discuss and which has been prescribed as agricultural income, then that income will be treated as agricultural income and that is not going to be taxable. So to get the exemption under section 10(1), agricultural income is exempt from tax. So that is exempt from tax under section 10(1) only if it satisfies the definition of agricultural income as under section 2(1)(a). So what I am trying to say that if your income falls under section 2(1)(a), that will be considered as agricultural income and that income can avail the exemption under section 10(1). So what we are going to discuss first is section 2(1)(a). What is the meaning of agricultural income? Because if you have an agricultural income, that is going to be exempted. So agriculture income means, from here we will understand what is the exact meaning of agricultural income, or we can say what activities will be termed as agricultural income under Income Tax Act. The first one is very simple. Any rent or revenue derived from land which is situated in India. So it says any rent or revenue, both terms are important of course, any rent or revenue derived from of course land which is situated in India. Any income will be treated as agricultural income only if that land is situated in India. So if you have a land is outside India, like you have a land in Sri Lanka and you are doing farming operation on it and earning some revenue, that is not going to be treated as agricultural income under Income Tax Act and used for, of course, the land should be used for agricultural purpose. So in a single sentence, you can see like almost 5 or 6 important words. It generally do not happen. In a single sentence, there might be 1 or 2 words are important. Others are just to make that sentence complete. But you can see how important the first sentence. It is a single sentence and it's cover almost 6 important words. So there should be any rent or revenue from land which is situated in India and used for agricultural purpose. So that kind of income will be termed as agricultural income. Let me give you an example. It's like this. It's a, if you have a land in India, fine. If Mr. A is having a land in India, so if he is doing farming operation upon it, if he is doing farming activities on it and produce agricultural produce, of course, any agriculture produce and By sale of it, he get revenue. By selling this agriculture produce, he got the revenue. He earned the net profit, we can say. So that is going to be exempt, because it say if any revenue is generated from any land which is situated in India and used for agricultural purpose. So there is land in India, of course, condition. There is farming, that in agricultural purpose, you are generating the revenue. Then the revenue is going to be exempted. Clear? So first thing was saying that must be a revenue. The other word was rent. So now it's a very interesting thing that if Mr. A having this land, but he do not want to perform farming activity himself. He's a businessman. He's doing business in the city, but he's having a land in somewhere else. So what he does, he let out this land to Mr. B. And Mr. B is doing now farming operation. Same. He is doing farming operation and earning agricultural produce. Again, out of that agricultural produce, Mr. B earning revenue, that means net profit. So what will happen? This net profit will be treated as agricultural income of Mr. B, because now he is the farmer, because he is actually doing that activity, and that is going to be exempted, of course, treating it as an agricultural income. So this is a normal case. There is nothing interesting. If you will do your farming, in that case, that profit is exempted. If you let out that property to someone else, now Mr. B income will be treated as exempted income. But the new thing is this: B will pay, of course, rent to Mr. A for this let out property. So now B will pay rent to Mr. A. So technically, Mr. A is not doing any farming activity. But if you let out your land for agricultural activity, then the rent you will receive will also be treated as agricultural income. That's a very, very, very nice provision. So now Mr. A will be encouraged to let out his land for farming activities in comparison to other. If Mr. A let out this land for any other activity and getting rent, that is going to be taxable. But now this rent will be also treated as agricultural income and will be exempted in the hands of Mr. A. So Mr. B income is also exempted because he is doing revenue income, and Mr. A income is also exempted. The important clarification is also given that what if Mr. B does not have money to pay the rent? Let's say if Mr. B does not have money to pay the rent, and he, in spite of paying the money, he pay agricultural produce. He say to Mr. A that I do not have money to pay your rent, so I'm giving you my some part of agricultural produce in the form of rent. So if he does not pay rent in monetary form, but he pays in the kind of his agricultural produce, even that value will be treated as agricultural income, and it will not be treated in the hands of Mr. A as taxable income. So the rent might be paid in cash or in kind, does not matter. In both cases, that is going to be treated as agricultural income in the hands of Mr. A. So I have also written an example of it in the notes. Notes say any rent received from use of agricultural land for agricultural purpose, whether in kind or money. I have told you in the definition of income. Income can be monetary or non-monetary. So same is here. So whether the rent is receiving in kind or money will be deemed as agricultural income in the hand of landlord. Yes. For example, share of agricultural produce, whatever agriculture produce that farmer earn, if he provides some part, some share out of that agricultural produce to the landlord as rent, then it's going to be exempted in the hands of landlord also. So share of agricultural produce received by a landlord is though in kind, but it is rent and thus agriculture income in the hands of landlord. Okay, now agricultural, the term agricultural grammar meaning, it has been written over here. You can read it out, of course. The agricultural has not been defined in the act. Our cultivation of a field involving human skill and labor on the land can be broadly termed as agricultural. Okay. Second word also, this is also called agricultural activity, process ordinarily employed to render the produce fit to be taken to the market. If you produce agricultural product, then that activity is agricultural activity, of course, but you cannot sell it like this. If you have sugar cane in your agricultural product, it has been fixed into the land, of course, so you cannot sell it with the land. You have to cut every agriculture produce to sell it to the market. So that cutting process or ordinary process which will make it marketable also included as a part of your agricultural activity. Is very simple thing, of course. Sometime to make the agricultural produce a sellable commodity, it becomes necessary to perform some kind of process on the product produce. The agri income from the process employed to render the produce fit to be taken to the market would be agricultural income. However, it must be a process ordinarily employed by the cultivator or receiver of rent in kind, and the process must be applied to make the produce fit to be taken to the market. So any activity which makes that product marketable will also be considered as agricultural activity, and if you earn any income for that, that is also be called as agricultural income. Sale of such agricultural produce in the market, but when you sell that product in the market, and if there is some activity which is not directly connected to your agricultural activity, in that case, some part of that agricultural activity income is going to be exempted, and some part of that stand this point number 2 and 3 in detail with example. Okay, so just stay with me. I'll tell you each and everything. Relax. Any income from the sale of any produce to the cultivator or receiver of rent in kind is agricultural income, provided it is from the land situated in India. We already knew it. And used for agricultural purpose, of course. It says now, however, if the produce is subject to any process other than ordinary employed to make the produce fit for market. So if you are doing any ordinary activity, that will be treated as agricultural activity. But if you are doing any activity to make the product fit for market, but that is not the ordinary activity. If you change the nature of that product, like from sugarcane, we are producing sugar and then we are selling into the market the sugar. So process to make it sugar is not an ordinary process. It's a separate process. In that case, we called it a composite business. So how we taxable that, how we'll find it out, etc., that we will discuss in composite business. That is going to be discussed very soon. The income arising on sale of such produce would be partially agricultural. I told you, if there's that activity, those are ordinary, then does not matter. The income will be called agricultural income. But there are some activity which are not ordinary activity. Then some part of income will be agricultural and some are non-agricultural. Agricultural part will be exempted and non-agricultural is going to be taxable. How, where, why, etc. I'll answer you. Relax. Now we just discussed point number 1, which says if you have any rent or revenue income from agricultural activities on a land which is situated in India, that is an agricultural activity. Now point number 2 is about income from farm building, or we can say farmhouse. If you have a farmhouse and you let it out, then the rental income of that farmhouse also can be treated if these 4 conditions are fulfilled. So that rent income of farmhouse will be treated as agricultural income and exempted if these 4 conditions has been fulfilled. What are these 4 conditions? Let me tell you an example. So in first case, we discuss if you have any rental income or revenue income from land. And now we are talking about farmhouse, and farmhouse technically is a building. So it says if you have a farmhouse and you let it out this farmhouse, like if Mr. A, this is a farmhouse, of course, and he let it out this farmhouse to Mr. B. Then Mr. B will pay, of course, rent to Mr. A. So that is also be treated as agricultural income if these 4 conditions is fulfilled. Condition number 1 say that this farmhouse, what we are talking, should be within the immediate vicinity of the agricultural land. Vicinity means border. So where this farmhouse should be situated, it should be situated within the boundary of that agricultural land on which agricultural operation has been taken out by Mr. B. So B technically take the land on rent, and within that land there should be a farmhouse also, which is also being taken by Mr. B. So first condition, that farmhouse should be within the boundary of agricultural land. The second one, the farmhouse should be occupied by the cultivator. That means this farmhouse has been used by Mr. B. Cultivator means farmer, etc. So this farmhouse has been also be used by Mr. B. So agricultural land has been used by Mr. B, and this farmhouse also must be used by Mr. B. So both things must be occupied by Mr. B. Condition number 3 says this farmhouse should be outside. This farmhouse should be outside urban area. That means this farmhouse should be in rural area. It should be outside the limit of urban area. What is the meaning of urban area, rural area? That is going to be discussed. And the last thing, the cultivator, that means the Mr. B should use this house, should use this farmhouse either for his residential purpose, dwelling purpose, that means residential purpose, that he is living there and caretaking of his agricultural activities. So either he used that residential house for residential purpose or as a storehouse for his agricultural produce. If these 4 conditions has been fulfilled, then the rent paid by Mr. B to Mr. A will also be treated as agricultural income in the hands of Mr. A. So these 4 conditions is of course over there. The building should be on the immediate vicinity. Vicinity means boundary of the agricultural land. Building should be occupied by the cultivator. The land is situated outside the urban area, and the cultivator should require the building as dwelling. Dwelling means residential purpose or as a storehouse. So if all of these 4 conditions has been fulfilled, or then the rental income is going to be exempted in the hands of Mr. A. So what is the meaning of urban area or rural area? Now let me tell you that. What is urban area and rural area? It says there is a municipality of every area. There's a municipal limit of every area, of course. So there is a municipality limit of all area, and it says if the population within that municipal limit is exceeding 10,000, if the population exceeding 10,000 within any municipal limit, that whole area will be treated as a urban area. Simple. So what is the meaning of urban area? If there is a municipality and there's a population is more than 10,000 in that particular municipality area limit, then the whole area will be called a urban area. That's a simple definition. Now department also increased this limit. It says if the population is more than 10,000, if the population is more than 10,000 but less than 1 lakh, the population is more than or equal to 10,000, and if it's less than 1 lakh, then the area after this area where the municipality limit ends, 2-kilometer area after this area will also be treated as urban area. Now this whole area will also be treated as urban area if the population is more than 10,000 and less than 1 lakh. Now if the population is more than equal to 1 lakh but less than 10 lakh, then 6 kilometer from this area, now the 6 kilometer from this area will be covered as urban area. The diagram is really bad, of course. I told you my drawing is really pathetic. So you should understand the logic, what I'm trying to say. If there is a population which is 10,000 or more, let me see it's exactly. Okay. So it says if your population is exceeding 10,000, the population is exceeding 10,000 and up to 1 lakh, then the limit after 2 kilometer, the limit after the municipal area up to 2 kilometer will also be treated as an urban area. If the population exceeding 1 lakh and less than up to 10 lakh rupees, then the 10 lakh population, not rupees, of course, sorry. So if more than 1 lakh and up to 10 lakh, if the population is that much of this area, of course, we are talking about the population of this area only. In that case, 6 kilometers from the boundary of this boundary will be treated as the urban area. And if the population exceeding 10 lakh, if the population exceeding 10 lakh, then 8 kilometers from this range, 8 kilometers from this range will be treated as urban area. So where is the rural area? So anything beyond this boundary, is called technically rural area. So if you are living in a city where the population is exceeding 10 lakh, then the boundary where the city ends, after even that 8 kilometer, you should not have your farmhouse. If the farmhouse situated within these area, then the rental income is going to be taxable. That is not going to be exempted. So it's looking like a solar system, a destructive solar system of my drawings. So apology for that. So we will read with the provision. I just made this diagram to make you feel the concept exactly. So there is a definition, that is urban area means any area within the jurisdiction of a municipality or cantonment board having a population of equal or more than 10,000. So if there is any municipality, the population is 10,000 or more, the whole area which is covered by that municipality will be called a urban area. And if the population within that municipality is more than 10,000 up to 1 lakh, then next 2 kilometers is also urban area. If the population is more than 1 lakh up to 10 lakh, then 6 kilometers will be your urban area. And if it's more than 10 lakh, then from that boundary, the next 8 kilometers will also be treated as your urban area. So our farmhouse should be outside that boundary. This is a definition is written down in a format. So we have discussed about two income which will fall in the definition of agricultural income. First one was rent and revenue. Second was rent of farmhouse. Now third is like agricultural income includes income from nursery operation. You all might have known the nursery business, of course, where the plants, etc. we trade. So if you are running a nursery, and that income is also be treated as your agricultural income, whether you are growing that plants on yourself or you are being purchased and selling activities. Okay. Now the fourth is very important, that is composite business. That's what we were talking about in point number 1. Composite means mixed. Composite means we can say we just combined. So we are talking now about the composite business. Those business which do have some activities which are not directly connected to the agricultural activity, as I told you, making sugar from sugarcane, making tea from tea leaves, making eraser, etc. from the natural rubber, etc. So those business, those do have these kind of activities. Like I am doing a business, I am growing plants and I am growing fruits, etc. And after growing that fruits, I am into the business of converting those fruits in juice or jam, and I am selling in the market the juice or jam, etc. So this is also an example of a composite business. In case of composite business, how we need to find that income, how much income is related to agricultural activity, and what amount of income is actually connected to the non-agricultural activity. We have to find it out, because the portion which is related to agricultural activity is going to be exempted, and the portion which are connected to non-agricultural activity is going to be taxable. How it will happen, we will discuss later. Now, would income arising from transfer of agricultural land situated in urban area to area be agricultural income? So we were discussing, if you are earning agricultural income on any land, that is going to be exempted as agricultural income. Now the question is, what if we sell our agricultural land in urban area? If I have an agricultural land in urban area and if I sell it, then the profit arising on that sale is going to be exempted or taxable. The answer is taxable. For now, we do not need to understand this concept also, because this is the part of our capital gain chapter. For time being, just an example to make you understand that if you are technically sell your agricultural land, which is in urban area, not in rural area, it's an urban area. If you sell it, then the profit is going to be taxable. Here is the example. Mr. A sell agricultural land in New Delhi for 10 lakh and makes a surplus of 8 lakh. That means he gain a profit of 8 lakh. This surplus will not constitute agriculture income and going to be taxable. Just do not worry about this provision. This is going to be discussed in detail when you will read the chapter capital gain. Just relax. Now, indirect connection with land. There are certain things which is called agriculture income. If you are doing some activity on agricultural land, that does not mean that any activity on agricultural land will be agricultural income. No. So there are certain activities which is connected with agricultural land, but even in that case, that is not going to be treated as your agricultural income. For example, I have an agricultural land, clear, and I am doing operation on agricultural land, some agricultural activities. So assume I produce sugarcane. So I produce sugarcane. Obviously, I am not going to work on the land. I will hire labor. Those will work on agricultural land. So I produce that agricultural product like sugarcane and I sell it in the market and earn a profit of 20 lakh rupees. That is exempted for me because that's my revenue income as per example number, as per the provision is point number 1. But those are working on my behalf in that agricultural land and I'm paying them wages or salary. So those, they are earning wages or salary. That salary wage is not their agricultural income because they are doing work. Whether I'll ask them to work in agriculture activity or non-agriculturally, they are technically earning salary or wages. So that is not, they cannot say that we are working for agriculture activity, so this is also our agricultural income. No. Why no? Because the provision we have just studied, in those provision, there is no concept that salary income which is used for agricultural activity will be treated as agricultural income in the hand of employee. There is no concept. There is only 4 concepts in which we can treat income as agricultural. If you are having any rent or revenue from agricultural land in India, if you have a farmhouse activity, if you have a nursery operation, and the 4th one is composite business. Any other activity which do not fall in these 4 categories will be an non-agricultural income and going to be taxable. So actually this concept, this topic is just to make you understand that all activity which are going to be happen on agricultural land not going to be treated as agricultural income. Clear? We have seen above that agricultural income is exempt whether it is received by the tiller or the landlord. However, non-agriculture income does not become agriculture merely on account of its indirect connection with the land. The following example will illustrate the above point. X was the managing agent of a company. He was entitled for a commission at the rate of 10% per annum on the annual net profits of the company. Correct? So he is like an agent who received 10% of the profit as a commission. And assume that company involves in agricultural activity and earned a profit of 5 crore rupees. So that 5 crore is going to be exempted for the company because the company is involved in the agricultural activity, but the commission of 50 lakh which is going to be received by the agent will not be an agricultural income. I hope it's clear. It's very, very clearly observed because that income what the agent is earning, that is commission, not agricultural income. Clear? A part of the company's income was agricultural income. I can tell you this also, like when you go to the vegetable, whenever you are going to buy a vegetable in the market, then the person who is selling your vegetable or fruits, etc., he's selling these fruits and vegetable to you, but that is not his agricultural income because he does not produce that. He's in a trading business only. He purchased that vegetable from farmer, etc., and he sell it to you. So whatever he's earning, that is not agricultural income because he does not produce it. The person who will produce that income will be can be treated as a farmer, and in that case only it will be treated as an agricultural income. And we have the exception in case of rent. In the rent case, the first point when we discussed that if Mr. A let out his land to Mr. B and Mr. B pay rent to Mr. A, in that case it is only, even if Mr. A is not doing any agricultural activity but is specifically income tax treated, that income is agricultural income. But in other cases, these concept is not going to be applicable. So Mr. X claimed that since his remuneration was calculated with reference to the income of the company, part of which was agricultural income, such part of commission was proportionate to the agricultural income. No, it cannot be constituted as an agricultural income. Same example number 5, you can read it out, of course. Example number 6 also, of course. So now there are example of agricultural income, income from sale of seeds, income from growing of flowers, etc. These are agricultural income. There are some non-agricultural income, income from breeding of livestock, income from poultry farming, income from fisheries, income from dairy farming. There's a concept also, if there is some natural, we can say, if we do not produce agricultural product, but we got it automatically, naturally, like it happens in the rainy season, that if you have a park in front of your house, of course, in rainy season, there is automatically some plants has been grown, naturally grown. So if there is some naturally grown plants, then I just sell the produce from that plants in the market without doing any activity of agricultural nature. In that case, that is also not an agricultural income. It has also been given in example number 6. In regard to forestry of a spontaneous growth, those grow automatically, which grow on the soil unaided by any human skill and labor. There is no cultivation of the soil at all. Even the operations in the nature of forestry operation performed by SSC may have the effect of nursing and fostering the growth of such forestry, it cannot constitute agricultural operation. So if you technically do not cultivate, do not involve in the agricultural operation directly, and if you sell any agricultural produce without involving in that cultivation, in that case, that income is going to be taxable as your non-agricultural income. Now the provision of composite business is over here. So that what we just discussed, they were like theoretical provision of agricultural income. Now we are going to discuss about the practical provisions of agricultural income with non-agricultural income. It is a very, very important topic for your examination also. And it will technically connect it with your rates of tax topic. So generally, what is the provision? Generally, the provision says that agricultural income is exempt from tax. This is the basic provision. If your income fall in the definition of income, what we discussed, there are technically 4 kinds of income. It's very simple to find out that any income is agricultural income or not. You might be going to ask me a lot of queries, sir, this income is agricultural or not, sir, that income is agricultural or not. So let me give you a very, very easy thing to find it out whether it's an agricultural income or not. So all your question will be solved in only one example or by one trick. I have taught you the meaning of agricultural income under section 2(1)(a). So whenever any question comes into your mind, so before asking to me or anyone else, just figure it out that we discuss any rental income or revenue from agricultural land in India used for agricultural purpose, and in case revenue also include in cash or in kind, only for this case, right? So this is the agricultural income. Point number 2 says farm building rent, and farm building rent will be treated as agricultural income if that fulfill 4 conditions. Point number 3 says that is nursery operation. That means trading of plant, etc. That is also agricultural income. And that 4th is composite business. If you have a business which has some agricultural income and some non-agricultural, so in these case, 100% exempt. The whole activity will be treated as agricultural income. And in this case, there will be two parts. Agricultural income part, we need to find it out separately, and non-agricultural income. So this part is going to be exempted, and this is going to be taxable. How we find out agricultural and non-agricultural in case of composite, that is a topic that will be discussed after integration, what we are going to discuss right now. So if you have any question in your mind, any example, and you need to find it out whether it's an agricultural or non-agricultural, just try to put your query in these four categories. If any of your question or your income does fall in any of this category, that is going to be agricultural, otherwise not. So whenever you need to answer your question, then you should process it in this format. Try to find out whether it's fulfilling condition number one. Okay, let me ask you, and you should all give me an answer of this question. So if I ask you that there is Mr. A, and he has a cold storage. You all know the meaning of cold storage, of course. And what he do, he took agricultural produce from farmers, and he put that produce in his cold storage. So farmer gives him his agriculture produce, and he put their agricultural produce in his cold storage and charge rent from farmer. So if I ask you a question whether a rent received by a cold storage owner from farmer to preserve their agricultural produce, does it fall in any of the definition you read till now, like point number 1, 2, or 3, or 4? So just try to answer me whether a cold storage rental income will be considered as agricultural income as the provision I have discussed with you right now or till now. So tell me the answer. Let's see what is your view in this question. So is cold storage income will fall in the definition of agricultural income? Correct. The correct answer is no. Very nice. You all must answer correctly. Most of you, of course. So, because this concept does not fall in the first category, because in first category we talk about the rent of agricultural land only. Again, the second point, rental income, is about farm building rent. So rental income is only in point number 1 or 2. There is no concept in rent in point number 3 and 4. So that income will not be treated as your agricultural income. Very nice. Now one more question, and you have to answer it correctly. I hope you all must answer it correctly. So the question is this. Read it carefully and then answer me, because most of the students technically not able to answer it correctly. So just read it carefully and then answer it. The question is this. Suppose Mr. Ram, who lives in a city, having a land in front of his house. Fine, simple. So Mr. Ram lives in a city having a land in front of his house, and he does agricultural operation on that land and produce sugarcane. Okay, and he sold them and earned a net profit of say 20 lakh rupees in previous year. So you need to tell me whether this 20 lakh rupees will be considered as his agricultural income or not. The question is clear. Mr. Ram lives in a city He have a land in front of his house, and on that land he performed some agricultural activities and produced sugar cane. And after selling into the market, he got the revenue or profit of rupees 20 lakh in that previous year. So whether it will be treated as an agricultural income or not, this is the question. And let's see, can you answer it? It's a good one. Okay, so let's see the answer. The correct answer is this 20 lakh will be treated as agricultural income. That is an agriculture. Some of you have said yes, some of you have said no. The correct answer is yes, it is an agricultural income, because I just told you, find it out. This example will fall in which category? Is it a part of composite business? No, because I have not told you exactly what is the meaning of composite business. We will discuss it. That is not a nursery operation. That is not a farm building rent. That is a revenue concept, that if you are doing farming and get some profit, that is a concept which is fall under revenue. Now, what, in which condition you are getting confused, that I have written city over here. So you're thinking it is an urban area, so it will not be an agriculture income, but you forget that urban area concept is applicable for farm building rent. For the first point, I have just said you the land should be situated in India. There is no urban ruler for agricultural operation. Urban area concept is only for point number 2, not on for number 3, not for 4, not for 1. And as soon as I write that city provision, some of you think it's an urban area, so that is going to be taxable. No, because of this example fall in category number 1, and there is no restriction regarding the urban or rural. So that is an agricultural income. So that's what I'm saying. It's CA, not BA. So read the question carefully, because examiner know where you are going to do the mistake. So just read the question, apply the provision, and then you will get the correct answer. Do not do in a hurry. Fine. So now we are going to discuss integration provision. So integration means addition, combine, clubbing, etc. It does not have any connection with the integration of maths, what you have read in your earlier classes. So that now integration is all about that combined, that combination, that addition. Why we are discussing integration provision? Because government relies, income tax relies, there are two kinds of farmer. One is a pure farmer. He's only doing agricultural activity. So he is only agricultural income, no other income. Those are called pure farmer. So those 100% income is exempt from tax. For example, there is a Mr. A who is doing agricultural activity and earning the 10 crore rupees of net profit. What is the tax? Zero tax, because he do not have any other income. But there are certain farmer also, those are doing agricultural activity as well as they have other income also. They have invested in properties, so they are getting rent. They have invested in shares. They are earning dividend income, interest income. They are doing some normal business also. There are a lot of farmers. Those are doing farming activity and also running normal. They have schools, colleges, hospitals, etc. So they have also other income. So government decided that if you are a pure farmer, we will not charge any tax from you. But if you have income which is agricultural and other than agricultural also, now you are not a pure farmer, then we will charge tax from you, but in a different way, not as per the normal provision. We will charge a tax from you in a different way. That is called integration provision. With integration, and this is the process we need to fulfill to apply these provision. So integration concept will be applicable. We have understand how to calculate tax in our basic concepts. That if income of 250 is exempt, then in some case 3 lakh, in some case 5 lakh, then the rate is 5, 20 and 30, etc., etc. But if this concept applicable, then the calculation of tax will be changed. It will not be done as per the provision we have discussed in chapter number 1. Rates will be same, but a new concept, a new process will be introduced. So when this provision will be applicable, you should understand that very carefully, that integration provision will be applicable only if these 3 conditions are satisfied only. So if in question we need to apply integration provision or not, that will depend upon if we fulfill these 3 conditions. Then integration provision need to apply. The condition number 1 is this is applicable only for individual, HUF, AOP, BOI and AJP. Only for these people this condition applicable. Your agriculture income must exceed 5,000 rupees and your non-agriculture income must exceed the maximum amount which is not chargeable to tax. That means your agriculture income must exceed 5,000 and your non-agriculture income must exceed 250, 3 lakh or 5 lakh as the case may be. And you must be an HUF, AOP, BOI and AJP. This concept is not applicable on partnership firm, LLP, company, etc. You will come to know why it is not applicable as soon as you will understand the process, what we will going to discuss. So if these 3 conditions are fulfilled, then the calculation of tax concept, the process will be changed. We cannot do so that agriculture income exempt and calculate tax on non-agricultural. For example, if integration provision would not have been there, assume there is no integration concept has been there, and in question it is given that Mr. A, an individual, his agricultural income is 10 lakh rupees and his non-agricultural income, say example, 30 lakh rupees. And it is asked to calculate tax. So if we do not know about the integration provision, how I will going to calculate tax? I will assume agricultural income is exempt, of course. So I calculate tax on only non-agricultural income with normal provision. If nothing is given in question that Mr. A age, etc., then always assume less than 60-year age and resident. This is the basic concept. If in question the age, etc., not given, assume take the person as an individual, less than 60-year of age and resident. So I will calculate the tax as per the normal provision. Up to 250 is exempted, of course. 2,50,000 is exemption. In this case, balance 2,50,000 going to taxable at the rate of 5%. Then balance 5 lakh is going to tax at the rate of 20%. So out of this 30 lakh, here is 10 lakh. The balance is 20 lakh rupees, which is going to taxable at the rate of 30%. So the tax will be 0, 12,500, then 1 lakh, and then 6 lakh. The tax will be 7 lakh 12,500. I guess. Okay. So rebate will not be applicable, of course, because rebate applicable only if income is up to 5 lakh rupees. So no rebate. Surcharge will also not applicable because it applicable when an income exceeding 50 lakh rupees. So cess will be applicable, 4% cess on this value, and that will come around, just a second. That is 28,000. 500, so your tax will be total 741,000. If these provisions would not have been there, if no integration concept is there, your full agriculture income exempt and tax will be calculated as per normal provision upon non-agriculture income. Now the integration provision has came into the force, and it says if you are an individual, if you have agriculture income exceeding 5,000, and if you have non-agriculture income exceeding your exemption limit, in case it is 2.5 lakh, what we are discussing. So we are fulfilling all 3 conditions. So in this case, now as per integration provision, we have to calculate tax. So now integration provision says what? Understand. integration provision says, step number 1, it says calculate tax on full income. That means assume your agricultural income also as your non-agricultural. Step 1 says calculate tax on agricultural plus non-agricultural income both. Assume your non-agriculture is now 40 lakh rupees. So step 1 say you have to calculate tax assuming that you do not have any agricultural. The agriculture is like non-agricultural. So you have to calculate tax on both income as per normal rate provision. So that is wrong technically. So step 2 say just wait. You technically calculate tax on 40 lakh rupees. But you have to calculate tax on 30 lakh rupees because agriculture income is technically exempted. So department say in step number 2, what we will do, now you have to calculate tax on your agricultural income plus the exemption limit income. Because in this case, exemption is 2.5 lakh. Now assume in first step, you have to calculate tax on 40 lakh rupees, assuming that the 40 lakh is your non-agriculture income. Now step number 2 is fixed. It says now you have to calculate tax considering your agriculture income and the exempted limit income. For example, if in this case, Mr. A is senior citizen, then I will write it down agriculture income plus 3 lakh. If it's a super senior citizen, then I'll write it down agriculture income plus 5 lakhs. So in this example, now we need to calculate tax on 12.50 lakh. So step 1, we have to calculate tax on 40 lakh. Step 2, we need to calculate tax on 12.50 without considering the cess. We need to calculate tax only without considering the cess and rebate provision. If the income is exceeding 50 lakh, then we calculate tax and surcharge. If the income is this income exceeding 50 lakh, we will calculate tax and surcharge as per normal provision. We will not take any effect of rebate and we will not give any effect of cess. Rebate and cess we will not consider in step number 1 and step number 2. That will be considered in step number 3. So now what is step number 3? Step number 3 is just simple. Step 1 minus step 2. That is your step number 3. As simple as that. So the tax we find out in step number 1 and the tax we will find out in step number 2. The difference of that tax will be your tax liability. Now we will impose rebate and cess provision. So now rebate can be deducted if your non-agricultural income is up to 5 lakh. There's a rebate concept. Rebate says if you are an individual plus resident, only in that case it can be deducted. And if it is also deducted up to, if your non-agriculture is up to rupees 5 lakh. In our example, the non-agriculture is 30 lakh. So rebate is not applicable. Now, cess will be applicable always. I told you when there is a tax, there will be cess. 4% cess will be applicable, of course, on this income. This income, we need to calculate 4% of cess. After this will be your tax liability. So step 1 says calculate tax assuming your whole income is non-agricultural. There is no calculation of tax different provision. Calculate tax as per normal provision. Then again calculate tax now on fixed provision agriculture income plus your exemption limit. Whatever the amount come, you have to calculate tax on that income. Now I'll solve it for you. Step 1 in our example, we have to calculate tax on 40 lakh rupees income. So the tax will be on 40 lakh, our tax will be 10 lakh 12,500. No surcharge because income is still 40 lakh rupees. Rebate cannot be claimed in this step. Cess we cannot impose. Now step number 2 says we have to calculate tax on 12.50 lakh rupees as per normal provision. 12 lakh 50,000, the same concept. Deduct 2.5 lakh first, then balance 5%. So if I calculate tax on 12,50,000 as per normal provision, then my tax will be 1,87,500. I'm not teaching you any new provision to calculate tax. You just need to calculate tax assuming your income is 40 lakh in first case, and thus assume your income is 12.50 lakh and calculate tax as the same process like this, first 2.50, etc. Do not try to do any or take any shortcut. You have to follow the provision like this. Then step 3 says 1 minus 2. If I deduct this, now my tax will be 8,25,000. Step 1 minus 2. So rebate is not applicable, of course. Surcharge is not applicable, of course. Cess will be applicable 4%. So now I will add 4% cess. That is 33,000. So now my total tax liability is 8,58,000. So if these provisions have not been here, then we are going to pay tax only 7,41,000, and due to this integration provision we have to pay tax now 8,58,000. So there's an increment in tax of almost 1,17,000. And technically you cannot say that we charge tax on agricultural income, because what government say, look, we have charged tax on agricultural plus non-agricultural income both. That was our mistake. Now let's do one thing, deduct the tax of exempted income. So your agriculture is exempted and your 2.5 lakh exempted. So now we will calculate tax of exempted income and we will deduct it. So what we will have, a tax of our taxable income only. Understand what government did? Government did, they technically calculate tax on your exempted as well as non-exempted income, agricultural plus non-agricultural, and after that they deduct the tax which might have been levied on only your agricultural or exempted income. So if in the total tax, if out of the total tax we deduct the tax of exempted income, then the remaining tax will be out of your taxable income. So government said, look, we just did the same. We, out of your total tax, we deducted the tax which belongs to your exempted income. So now we have the tax which technically belongs to your only taxable income. But you can see what happens. Technically, this tax has been increased by 1,17,000. And why it happens? Because at the time when we tax this 40 lakh, then the higher slab rate applicable on agriculture income of rupees 10 lakh. Because it's 40 lakh, the higher slab rate of 30% is applicable when we calculate tax over here. But when we deduct the tax of that agriculture income, as taking that 12.5 lakh, that only 30% is applicable on 2.5 lakh and balance is 20% or 5%. So when we calculate tax in point number 1, then technically the agriculture income is going to be taxable at 30%. But when we are going to deduct, then we take the deduction on the basis of some part on 30%, some part of 20%, and some part is 5%. So that's why government increased their tax liability, even saying that we did not tax your agriculture income, we deduct that tax. And because you are not a pure farmer, that's why we are doing it. If you're a pure farmer, if this question relates to a pure farmer, then it will be solved like this only. This is exempted and taxes on this. In examination, you do not need to show this concept that what if this provision was not had been over here. I just made the both concept to make you understand that the implication is to increase tax. Government wants to increase tax with this process. That's why they introduced the provision of integration. In examination, you just need to solve via this method if these conditions are fulfilled. So it shows you income taxes, how smart they are, that even without taxing, technically they did not tax the agriculture income because they deduct the tax of that exempted income out of your total income. So technically they did not tax it, but still they increase the tax. So there are the steps: computation of tax on total income, including agricultural income, computation of tax on agriculture income, plus maximum amount not chargeable to tax. Step 3, your tax liability is 1 minus 2. Rebate applied in section 87A, if applicable, plus 4% cess. Step 1 and step 2 tax calculate without rebate under section 87A of 12,500, and rebate of 12,500 will be available after step 3 tax liability if your normal tax income up to rupees 5 lakh. So that was the integration provision. Let me take the queries, what you have asked from, you're asking from long. Okay. So let's see. The dividend query I have already taken. Okay, Ms. Shanti Shri is asking, if Mr. A sell goods which is received from Mr. B as a rent in kind and received income, that income is called agricultural income. If you get the rent as per the point number 1, I have told you an example that Mr. B paid the agricultural produce and Mr. A sells in the market. In that case, that is going to be your agricultural income, of course. Machine used for agriculture, the person renting it, that will be exempted? No, I have told you this question does not fall in the 4 categories. Always apply your question in this 4 category. If it does fall so, that is going to be exempted. Rental income of land and farmhouse, that is only exempted. So the agricultural expenses and loss in agriculture, then what in the case? That will be your loss, of course. That is, loss cannot be taxed in any case. Only income can be taxed. So if in agricultural business there is a loss, then of course it cannot be claimed. It cannot be taxed, of course. Vicinity means boundary. Sushil, pencil come under composite. I'll tell you, if there is an activity of agriculture also active involved, then it will be your composite business. We will discuss the composite, just about to discuss the composite business provision. Here is the diagram of composite business. You can see it, of course. We will discuss it. Okay, next is Jamil is asking, sir, what if you purchase the agricultural land at a time our area was rural, but then after years, income tax is an annual charge of income. So initially, if that area is your rural area, till that year, when it is a rural area definition, your income will not be taxable. But from the year it will cover the urban area, then it will be treated as an urban area from that year and tax can be charged. Jagannath Jagthadharni is asking, if a power transmission tower erected in agricultural includes rent to the landowner by electricity board. No, it is not an agricultural income. Does power transformer relates to your agricultural produce? Of course not. There is no agricultural produce involved, so that is not going to be treated as agricultural income. Next is Dilip is farm situated in agricultural land in rural area, but due to increase in population, if the definition has been changed and your area falls within the boundary of urban area, then the rent is going to be taxable from that year. Okay. And if it is a partial year, like 3 months, after 3 months it happened, then the first 3 months income will be agricultural. After the next 9 months rent will be your non-agricultural income. Gram Panchayat is a separate provision, yet it's kind of a municipal area. So if you have a population more than 10,000 in that specific area, that is will be treated as your urban area, but generally it does not happen actually. Next is Jitendra is asking, let us assume X has 50 acre of land and he let out all his land to different farmers and earned 1 lakh. All this income is exempted. Yes, all income exempted. If you have 50 acre of land or 100 acre of land, and if you let that land out to farmers, and if they are doing farming operation, then all rent is your exempted income. Okay. Vrinda is asking, how nursery operation did government prescribe that if you are running a nursery, then you are actually encouraging the plantation, etc., which is actually very beneficial for our environment. So to encourage that business, they exempted that nursery activities as your agricultural income. Okay, now Jagadevi Malappa is saying cold storage income is not agricultural, but it falls in 4th category. No, it does not fall in 4th category. We are going to discuss the composite business category. Cold storage income does not fall in any category of agriculture income. That is going to be taxable, pure taxable. Okay. But cold storage is within the vicinity of agricultural land. Even if the cold storage, you are saying, who is Jamil is saying, answer is no. But what if the cold storage is within the vicinity of agricultural land and there itself the farmer is storing? So it is in a cold storage that is not used as a residential house. Cold storage means a specifically approved licensed area in which you can store your agriculture produce. So if that cold storage even is your in rural area, but it should be on that land on which your agriculture activity has been taken up. So if the cold storage fulfilling the 4 conditions for farmhouse building, then it can be exempted, but that is practically not possible because we need a separate license for it. So technically cold storage income is always going to be taxable. Okay, more queries. 20 lakh agricultural. Okay, population more than 50,000, urban area. Okay. Okay, sir, agriculture as per condition only exempted or fully? Yes, sir, if agriculture income 10 lakh and no other income, then we have to pay tax or not? I just discussed. If you have only agriculture income and it's 10 crore rupees also, it's not going to be taxable. Okay. Why cess will not impose in the excise? Because cess will be imposed after calculation of step number 2 or step number 3, because I told you cess is not technically is the amount of tax which is retained with income tax. It's for education or health purpose. So the tax part which remains with the income tax is like tax and surcharge only. So that's why cess will always be applicable after the complete calculation. Prince is asking step number 2, we have to apply only surcharge and cess on tax liability. No, step number 2, we just need to apply only surcharge. There is no rebate and no cess we can impose in these cases. Can surcharge be imposed in step 1 or surcharge also imposed in step number 3? If surcharge is applicable in step number 1, then it will not be applicable again in step number 3, of course. Surcharge will be only applicable in 1 and 2. Only rebate and cess will be applicable after step number 2, that means after step number 3. Surcharge will be applicable only step number 1 or 2. Calculate tax on 30 lakhs comes different amount. Let me see how it's a different amount. It will be same. If you calculate tax, let me see. How 187 is derived tax on 30 lakhs? I just told you we need to calculate tax on 12,50,000. Who is asking this? Madhvi, 1,87,500 is not tax on your 30 lakh. Step number 2 says we have to calculate the agriculture income, which in question is 10 lakh, not 30, and the 2.5 lakh. So we are calculating tax on 12,50,000. Do not confuse me. If a person is in farming business plus in employment, then he has composite income. I'll tell you what is the meaning of composite income. Basically, when to apply the integration tax calculation, there are 3 conditions need to be fulfilled. If you are individual, HUF, AOP, BOI, AJP, if your agriculture income is more than 5,000, and if your non-agriculture exceeding 2.5 lakh, then only you have to apply these provisions. Why these are not applicable on partnership firm and company? You understand why? Because only individual having individual HUF, AOP, BOI, AJP, they have slab rate of tax. Because of slab rate, we tax in step 1 the agriculture income with a higher rate, and we deduct the tax on that agriculture income with a lower rate. Only in that case. If you have if you are a partnership firm, then there is no concept of integration because the answer will be same always. For example, let's take there is a partnership firm, agriculture income is 10 lakh and non-agricultural is 30 lakhs. If you do not apply integration provision always, because in case of individual HUF, AOP, BOY, AJP, there is a slab rate like 5, 20, and 30, and there's a basic exemption limit of 2.5, 3, and 5. So in that case, due to integration, we tax that agriculture income at a higher rate and deduct the tax with a lower rate. In other cases like company, partnership, firm, LLP, etc., even you apply integration or you do not apply integration, there will be no difference in your tax. That's why it's not applicable on other persons. So income tax is very, very smart. That's why they are doing this. Do not ask this kind of question, Shivam. The revenue derived from cold storage is to be exempted because it's protect the product. We need to follow the law. We cannot make the law. So the law has been made that no, cold storage does not fall in the activity of agriculture activity, and that ends the things for us. We cannot technically argue the law about here. So what we are doing, we need to just interpret the law. So why it should be exempted, it should not be taxable, that's, please do not ask these kind of query. We have to follow the law. And again, we do not have a lot of time to discuss about the why thing. So we have to discuss the provision and to understand the concept. Whenever you have income of other source with that agriculture income, the Jagadevi is asking, sir, we have more than one source of income along with the agricultural, then integration applicable? Yes, of course. If you have agricultural as well as non-agricultural income, agricultural exceeding 5,000, non-agricultural exceeding 2.5, 3 or 5 lakh, and you are an individual HUF, AOP, BOI, AJP, integration provision will apply always, always. Okay, Kiran asking 500-acre agricultural land but income 2.5 crore fully exempted. If there's only agriculture activities, you are a pure farmer, then it's fully exempted, not an issue. If Kushi is asking a person sells agricultural land in rural area, then income will be taxable. That will be covered in capital gain chapter. For time being, I can tell you, yes, if agricultural land in rural area and if you are transfer it, that is exempted from tax, 100% exemption. Namrata survey asking if non-agriculture income is 40 and agriculture 20. Yes, in step number 1, if you calculate tax on that 60 lakh rupees income, then we will assume that it is your non-agricultural. So you have to applicable surcharge on 60 lakh rupees as per the concept. Very good question. This kind of question you should ask all. Namrata asked a very genuine question. Very good. Now again, Nidhi asking what I have already discussed, that if someone is doing job in agriculture product, then he's getting salary. That is going to be taxable. That is not your agricultural income. Did I told you that salary income is exempted in agricultural income? The 4 definition of agriculture income we discussed, there was no concept of salary income. So that is going to be taxable. Okay. Now we move on to our composite business case. Composite business says if you are doing any business, that composite business is related to point number 4, what we discussed in above provision. So I told you that the detail of that composite business will be discussed later. So this is the time we are discussing it. Determination of agricultural income in case of composite business. Composite business says when you are doing any agricultural activity as well as some other activity which is not ordinary activity to make your product marketable. That case of business is called composite business, or we can say if you are earning income from certain business, those involving agricultural as well as non-agricultural activity, that is called composite business. And we have the provision for that also. How we calculate tax in case of your composite business. If you are running a rubber business, rubber, that means from tree you got the natural rubber, and from that natural rubber you produce product which is going to be sold in market like eraser, rubber band, etc. In that case, you are getting the natural rubber. That is the part, that is the portion that will be covered under agriculture activity, and after getting that rubber with the help of your machine, etc., you process it and product different material of rubber and sell into the market. So that part, after getting the natural rubber till the product you sold in the market, that is technically called non-agricultural activity. So income tax has made prescribed provision. Whatever the profit you will earn from the sale of those products, that profit comprise both activities. Till production of natural rubber, the activity is agricultural. After that is not agricultural. But the profit you earn technically combine the gain of both kind of activity. So the fixed rule is 35% of that profit will be treated as non-agricultural and going to be taxable. And 65% will be treated as your agricultural income, and that is going to be exempted. Same provision has been made for coffee beans business. 25% of your profit will be treated as non-agricultural and 75% will be treated as agricultural. Coffee roasted or tea, in that case, 40% is agricultural profit and 60% of your profit will be your 40% is your non-agricultural and 60% is your agricultural business profit. How we will calculate tax in these cases? Let's take an example. For say, if you are doing a business of tea, from tea leaves, you produce tea and sell into the market. So this is again an example of your composite business. Now the provision says, the question say you earn a net profit of, for example, 40 lakh rupees. So out of this 40 lakh, technically 60% will be treated as your agricultural income. That means 24 lakh. And the remaining, that means 40% will be your non-agricultural income, that is 16 lakh. So now if in question it has been asked, what is the profit? Then we will distribute it like this. But examiner will ask, calculate tax on it. It will say it's a Mr. Ram who is doing this business. His age is like 65 years and he is resident in India. So now he'll say, okay, Mr. Ram who is doing this business earn a net profit of 40 lakh rupees. So calculate tax on it. Now again, we just discussed the provision of integration. And you always have to apply integration provision if those three conditions fulfill, whether the composite business or separate income business. Because now we have agricultural as well as non-agricultural income. We have both income. So the case is Mr. A. Mr. A is an individual, condition fulfilled, plus his agricultural income exceeding 5,000. Condition fulfilled, his income is 24 lakh, plus his non-agricultural income exceeding 3 lakh rupees, because he's a senior citizen, 65 year. So exemption limit will be 3 lakhs. So all three conditions fulfill. That means we have to calculate tax as per integration provision. Step number one says calculate tax on full income. Calculate tax if your income is 40 lakh rupees. If surcharge is also applicable. So on 40 lakh, if we calculate tax, that means it will come 10 lakh. Will 10 lakh 12,500. Okay. No surcharge will be applicable. If it is exceeding 40 lakh, it's 60 lakh, then we have to calculate surcharge also. Now step 2 will say, now calculate tax on agricultural income is in our examination is 24 lakh. Just follow the format and it will be solved so easily. And what is the exemption limit for in this case? 3 lakhs. So now you need to calculate tax on 27 lakh rupees. So in case of 27 lakh rupees, if I'll calculate tax, that will come around. Sorry, it's a wrong calculation of tax. Sorry, I took the exemption limit of rupees 2.5 lakhs. So that tax, if we calculate tax on 40 lakh rupees, in case of senior citizen, the tax will be different, of course. That's what I was thinking. So it will be 30 lakh. $10,10,000. My mistake, 10 lakh 10,000 will be your tax if you calculate it for Mr. A, who's a senior citizen. Now on 27 lakh, I need to calculate tax. That will be 6,20,000. No surcharge, because again, its taxes, income is less than 50 lakh rupees. Now, step number 3 says, find the difference. 3,90,000. Now we can say whether rebate is applicable. If your non-agricultural income, non-agricultural means we are talking about this. If your non-agriculture is less than 5 lakh, then I can take the rebate. But because non-agricultural income is more than 5 lakh, then no rebate. We can apply 4% cess on it. So applicable 4% of cess, and that is going to be our tax liability. So even if in case of composite business, always remember, if examiner asks for your calculation of tax, then you have to see if the other 3 conditions fulfilled, the tax will be calculated also as per the provision of integration. Okay, now for 3 business, we have a specific tax rate, that is 35, 65, 25, 75, and 40 and 60. But if you are running any other business except these 3, which is having composite business nature like sugarcane to sugar, that will be solved as per point number 4, rule number 7. And it says other composite business. For other composite business, we have to calculate like this: market value of agricultural produce utilized will be deducted from the sale price of finished goods. So after finishing this example, I will take a break. So just after 5 minutes, we will go for a break. First of all, let's discuss point number 4. So this topic of agriculture income will be finished. So the concept says that if the question relates to any other business except tea, coffee, and rubber, then you have to solve the question like this. For other business, you have to solve a question assuming that they have 2 separate business. Like for sugarcane, if the examiner asks you frame a question of sugarcane. In case of sugarcane business, examiner says that Mr. A running a sugarcane business and processes it into a sugar and then sell it to the marketer. Then it says you have to frame 2 separate profit. You have to find it out 2 separate profit. You have to find out the profit of agricultural activities separately, and you have to find the profit of non-agricultural activities separately. For that, you just need to draw 2 simple profit and loss account or trading in P&L with the given information, and that will be really, really easy because you all know how to frame a profit and loss or trading in P&L. The information will be given like this. That will be cultivation, cost of sugarcane. For example, is given in question 20 lakh. Then processing cost to make sugarcane converted into the sugar, that might be given in question 6 lakh. Then again, sale of sugar. Ultimately, you technically sell sugar in the market, of course. So the sale of sugar in the market is for rupees 50 lakh. And the last information which will be provided, that is fair market value of sugarcane. If you does not produce sugar and just sold the sugarcane in the market, the fair market value should be given in question, and that is given in question 21 lakh. So now examiner will say calculate agriculture income and non-agricultural, because this business does not fall in the category of those specific business, coffee, rubber, and tea. If that doesn't relate to those business, then we need to make a single P&L account, and the profit, whatever has come, need to be distributed as per the percentage. For example, if this does not belong to a sugar cane example, if it is a tea example, then how I will solve it? I will write it down the sale price of 50 lakh over here. I will write down the cost of cultivation 20 lakh and the processing cost of 6 lakhs. So my profit will be 24 lakh rupees. If it is a question of coffee, rubber, or tea, then I'll solve it like this. I'll make a combined profit and loss account. I'll take the sale price 50 lakh. I'll take the cost of cultivation 20 lakh, and I'll take the processing cost is 60 lakh. So the 20 lakh will be distributed as per the percentage, like 60, 40, 35, 65, 25 or 75. But if the question relate to any other business except those three business, then we have to make two separate profit and loss account. When you make this agricultural activity profit and loss account, then assume that you are just a farmer. You are just producing the sugarcane and selling it. You do not process it into a sugar. So you will easily be able to form this P&L. So this is a trick to solve this question. If the question belongs to any other business, those are not three activity business, then make two profit and loss account. And when you make agricultural activities profit and loss account, then assume yourself as a pure farmer. Pure farmer means just assume that you produce sugarcane and sell them into the market. You do not know what is the meaning of sugar. Okay, so if I'll make the this profit and loss account, the first information is cost of cultivation. So does it belongs to my activities? Yes, because I produced it. So I'll write it down in the expenses part. Cost of cultivation 20 lakh. Processing cost of sugarcane to produce sugar, does it belongs to me? Because if I'm a farmer, no, it does not belongs to me. I'll skip it. Sale of sugar, do I sell the sugar? No, I told you, assume you as a farmer. So I do not know what is the meaning of sugar, skip it. Yeah, FMV of sugarcane I have to take. If I sell this sugar cane in the market, then I will have the sale price of 21 lakh. So my net profit will be 1 lakh. That is my income from agricultural activities. Now, when we will solve this part, like non-agriculture activity, now assume yourself as a pure businessman. Pure businessman means you do not operate any agricultural activity. You just purchase sugarcane from the market and process it into the sugar and sell the sugar in the market. You purchase sugarcane. You are not a farmer now. Assume yourself as a businessman. So does cultivation cost will form part of my P&L? No, because I do not cultivate them. I buy them. Does processing cost form part? Yes, processing cost will form part of my expenses. Sale of sugar will form part of my sale. And I need to buy it from market. So this fair market value, which is sale in this P&L, will always be called purchase in this P&L. This is universal rule. Whatever you will take over here as a sale proceed, that is going to be a purchase over here, fixed provision. So now this profit, this called your not agricultural activity profit. And this will come 23 lakh rupees. This is your non-agricultural. And you can see the total of this one is 1 plus 23. And even if you solve it combined, the answer will be always same. If you assume this business as a single business, the answer will be same 24 in combination. And if you solve it separately, then the aggregate answer will always be same. That is 24 lakh profit. Why? Because what we took over here as a sale, we take here as a purchase. So if you cancel them both, then this P&L will result in that. That's a simple, like we can accounting provision. We sell this sale over here and we took over here purchase. So the answer will always be same, aggregate. But the calculation of tax will be different. In this case, the examiner asks you to find the tax liability. Then because my agriculture income exceeding 5,000, non-agriculture exceeding 2.5 lakh, etc. So we have to calculate tax as per integration provision. Even if this case, we have to calculate tax as per integration provision. And in this case also, we have to calculate tax on the basis of integration provision. Clear? So if any question relate other than those three business things, then this is the way to solve it. So we have not that much time because the topic of chapter is huge. And the most important topic in this chapter was agriculture income and the integration and the composite part. Because the integration and composite part question can be asked as numerical. Other provisions are like most of them now theoretical only. There's no much difficult provision except section 10AA. So agriculture income provision has been ended. Now I'm going for a break and I'll be back after 5 or 6 minutes. So you also take a break, have your tea, etc. And we'll resume very, very soon because we need to complete this topic today only. Fine. So just a break, then I'll take your queries also. Okay, Mr. Ram? Welcome back, everybody. I guess you have your tea and coffee, etc. I've also done mine. So let's move on to further. Let me take the queries, then I'll go for the further provisions. Fine. Okay, there is Srisht Jalan is asking, in the integration process, why is MR not taken into consideration if TI is above 50 lakh rupees? We will take the MR also in that condition. Of course, if the TI exceeding 50 lakh rupees, then the MR concept will also be applicable. So that will be more complicated for students. If the examiner will form that kind of question, that will really be complicated question. So generally, if the MR question institute or examiner needs to ask, then they will form a separate question for calculating MR provision. If they include that concept in your agriculture income question, that will be really a difficult process. Fine. So MR will be applicable. Okay, let me see any other query. Okay. Jay Prakash asking, kind only means of agricultural products only? Yes, only agricultural products should be taken in kind. That will be form part of your agricultural produce also. So now moving further, question number two, topic number two, amounts received by a member from the income of the HUF. So if HUF is earning some income, and if it transfer any part of that income in the form of profit, etc., that is going to be exempted in the hands of the member. As explained in chapter 1, HUF, a person, hence a unit of assessment under the Act, income earned by HUF is assessable in its own hand. So whatever profit HUF earn, they pay tax on it. And out of that profit, if any amount is transferred to the member, that will not going to be taxable in the hands of member. That is going to be exempted. In order to prevent double taxation of one in the same income, once in the hands of HUF, which earn it again in the hands of member when it is paid out of him. Section 10 to provide that member of a HUF do not have to pay tax in respect of amount is the main line which you need to understand. Any amount received by them from the family. It's simple. Next is, this is an example. Of course, you can read it. Share of income of a partner. If you are a partner in a partnership firm and the partnership firm earns some profit, then the partnership firm need to pay tax on it. And out of that income, if the partnership firm transfers its share of profit into the hands of partner, that share of profit also going to be exempted. The clause exempt from tax a partner share in the total income of the firm. In other words, the partner share in the total income of the firm determined in accordance with the profit sharing ratio will be exempt, of course. They are now simple theoretical provision. You need to understand what kind of incomes are exempted. Interest on money standing to the credit of individual in his NRE account. So if you are a non-resident and you are running a non-resident external account, then any interest accrue or arise on that account is going to be exempted as per section 10.4.2. As per section 10.4.2, in the case of an individual, any income by way of interest, if they are working in India on behalf of foreign government and receive salary remuneration from their government, but received in India. So what is the general rule? If anyone received or earned income in India, that is going to be deemed to arise in India or arise in India income. That is going to be taxable for non-resident also. But these are a specific exemption. In these cases, the person might be resident, ordinary resident, non-resident, whatever it is. But if you fall in any of this category, these have been specifically exempted. Individual assessee who are not citizen of India are entitled to certain exemption. Remuneration received by officials of embassies, etc. of foreign state. The remuneration received by a person from services as an official of an embassy, etc. is going to be exempted. Just read this thing and the condition, because we exempt their income in our country and vice versa, they exempt our ambassadors, those are appointed in their country, income received by them. So there is a contract between both government that we will not charge tax from your ambassadors and they will not charge tax from our ambassador. There is no technical point in this, just a pure reading. You have to learn this. Remuneration received for services rendered in India as an employee of foreign enterprises. Do read it. The general provision. I just want to take those provisions. Those are technical or there are something which I need to explain. Because today is my last session, so I cannot make it differ for my next session. I have to complete the provision, whatever we have for today only. So these are point number 1, 2, 3, 4. There is specific remuneration provision in which even income is arises and received in India, and the person is receiving it as a resident or ordinary resident or any category, but they will be exempted due to this specific exemption provided by the government of India. Point 6 again is specific provision. Royalty income or fees for technical services received from National Technical Research Organization. Payments to Bhopal gas victims. The disaster happened in Bhopal. If you received any compensation for that disaster, that is exempted. Point number 8 is important. In examination, the question has been framed on this particular exemption also, and it says compensation received on account of disaster. So if there's any disaster which is beyond our control and the government pay any compensation which is paid by central government, state government or local authority, only that compensation is exempted. This clause exempt any amount received or receivable as compensation by an individual or is legal here or on account of any disaster. The first point is that should compensation on any disaster. Compensation should be granted by central government, state government or local authority only. If any charitable organization, if any other organization, if any business organization provides any kind of compensation, that is not going to be exempted. Those are going to be taxable. Okay, the meaning of disaster has been already written over here, and this is an example. Almost this kind of same example has been asked in your examination. It was like there was a disaster and some organization, a charitable organization called Yatra Fund provides some compensation to the affected people. So will it going to be exempted or not? The answer was no, because that was not a local authority, that was not a central government, that was not a state government. So the same kind of example is over here for you. Solution, of course, below. Payment from Sukanya Samriddhi account. There's an account that's called Sukanya Samriddhi account. You can invest in that account and the amount you will receive on withdrawal, that is going to be exempted. If you receive any kind of scholarship to meet the cost of education, that is exempted from tax. So any kind of scholarship which is received from the approved organization for study, etc., that is going to be exempted. 11th point is also important. Payments to MPs and MLAs, Member of Parliament and Member of Legislative Assembly. The following incomes of members of Parliament or state legislature will be exempted. Daily allowance received by any Member of Parliament or any state legislature, that is exempted. Constituency allowances of MPs, that is also exempted. And constituency allowances of MLAs, those are also exempted. Awards for literary, scientific and artistic work and other award by government, those are also exempted. Any award instituted in the public interest by the central, state or by any other body approved by central or rewarded by central government or for such purpose as may be approved, that is going to be exempted. Pension received by a recipient of gallantry awards, or any pension received by a recipient of gallantry award, that will also be exempted. It should be awarded a Paramveer Chakra or Mahavir Chakra or Veer Chakra or such other notified government reward if you will get that. And if you are receiving pension after receiving these kind of award, that pension is going to be exempted, whether received by them or whether received by family. Income of member of a scheduled tribe, that is also exempted if situated in a specific area. The specified income of Sikkimese individual, that is also exempted. Tea board subsidy, that is exempted. Other subsidies as per government norm, that is also be exempted. Okay, so we have almost complete all exempted income. We have left with section 10 double, that is a special deduction for special economic zone provision. So So these provisions we will take after taking your queries. Let me see what query you have been asked. Okay, so integration calculation will be confusing for you when you will not follow the process I told you. Most of you students must be confused in step number 2, that if we are taking agriculture income 10 lakh and exempted income is 2.5 lakh, that is 12.5 lakh. Then again, when we calculate tax on 12.5 lakh, we will deduct 2.5 lakh initially. So if we need to deduct 2.5 lakh, then why we need to add it? So you might be thinking, why not we need to calculate tax on directly on 10 lakh rupees agricultural income? I agree. You might be thinking it, but I just made the provision easy, so you will not doing any mistake. Suppose what will happen if you will take calculate tax only on 10 lakh rupees income, agriculture income, then what you will do when you start calculating tax on 10 lakh, then due to the regular practices, what you are doing to calculate tax, you will again exempted 2.5 lakh from it. So your tax will be wrong. So that's why I'm saying add 2.5 lakh rupees with the agriculture income, because government says in step number 1, we will charge tax on your whole income. And step 2 said we will charge tax on your exempted income, and exempted include both your agricultural as well as your exempted limit. So that's what I'm asking. Okay, always include 2.5 lakh. So now suppose your income is 12.5 lakh and now calculate normal tax. That will be easy. But if you will think, no, I'll not add 2.5 lakh because I need to deduct it again. So I'll directly calculate tax on 10 lakh rupees. So in that calculation, you might deduct 2.5 lakh basic exemption again. So your liability will be wrong. So whatever I'm saying, follow it. The answer will always be correct if you follow what I'm saying. Add that's 2.5 lakh, 3 lakh, etc. and then calculate tax as per normal sense. So your answer will always be correct. Okay. Okay, where are the questions, queries? Who's asking is Jamil asking, it's taxable as it's only a land and not agricultural land. Questions कहाँ से लेनी है हमें? Just a second. No. Depends upon population. What are the questions? Okay. Siddhant Garg is asking, sir, if a farmer make a hotel on part of his farmland, revenue from which it will be considered. If it make a hotel on part of his farm, then any rent from or income from that hotel is going to be taxable as non-agricultural income. But if any rental income for the farmhouse or agriculture produce income, that is going to be exempted, of course. Divya Shri from Mumbai is asking, it is a part of agriculture, it is taxable because it's situated in urban area. Divya Mumbai, I don't know for what you asked this question, because this query is like long before you asked, and I'm confused regarding which point you are asking it. So please send me again your query, Divya Shri. I'll answer it. You have written it's a part of agriculture income. It is taxable because the part which is covered under urban area, any proportionate income on that part is going to be taxable, and the part which falls in the rural area, any revenue proportionate to that part is going to be exempted. Practically, it's very difficult because when we talk about the boundaries, then it's not that easy that your half part is in urban or rural, but if it is, then proportionate income will be exempted or taxable. Okay. Vrinda is asking, if a person is in farming business plus in employment, then he has composite income. Yes, of course. If I am doing farming income also and I am a salaried person in some other business also, then composite income, it will be called agriculture income and non-agriculture. It should not be called as a composite business, because in that case your business should have those both activities. But you have a salary income and you have agriculture income, then it's the example of agriculture as well as non-agriculture income. But yes, tax will be calculated as per integration provision. So that was Vrinda question. So example, limit will change accordingly if age 62. Correct, Kanishk, you are correct. If age 62, then we will take 3 lakh rupees in step number 2. If it's more than 80, then you will take 5 lakh in step number 2. Very correct. Prince is asking when to apply. I explained when to apply when you fulfill these 3 conditions. When you have 2 kinds of income. This is a universal rule. When you have agriculture as well as non-agriculture income, then you have to apply if other conditions satisfied. Agriculture exceeding 5,000, non-agriculture exceeding exemption limit. Okay. Who's asking? Nidhi Parikh asking, sir, if someone is doing job in agriculture product, then income is taxable. I've told in earlier few moments before, yes, that is not agricultural income, that is a non-agricultural income and going to be taxable. Rajni is asking, sir, there any possibility to claim agricultural loss? Income, those are exempted. Their profit or loss both do not have any effect on income. So if you have loss in your agricultural business, even then that loss is nil for the purpose of income tax. You cannot take the advantage of that loss anywhere. Okay. Next is the Jagadevi Malappa. Okay, she's asking or he's asking, sir, what if the agricultural land sold? It is covered in capital gain. I've told agricultural land, if it is in rural area, that is exempted under capital gain. But if it is in urban area, that's going to be taxable. So how to approach paper on time? Should we attend first question first or last? This is a subjective question and this is not my topic. If institute will allow me to explain how to attempt your paper, I can tell you how to attempt paper, but I need at least 1 hour to explain you how to attempt a paper. That's actually a very interesting question, and it's really help if you'll come to know how to attempt a paper. It's a art as well as it's a science also, and it really helps into solve a question. So if board of study will ask me to explain you, I'll explain you, but I need at least 1 hour to explain how to attempt a paper, and that will definitely going to increase your marks in every paper. If you just understand the way you should attempt a paper, because it's very, very difficult to attempt a paper in CA examination. If you're going to attempt in the right way, if a proper plan, that will really increase your marks with the same knowledge. And if you attempt in a wrong way with the same knowledge, you will lose a lot of marks. Okay. The revenue derived from coal is to be exempted because, okay, I have explained it. Okay, ruler, in border area, more than one source of income, I explained it. I have explained sale land in rural area, I have explained. Okay. Farmer hotel, open hotels, I've explained. Dubey is asking, sir, why not deduction applicable? It will be applicable on salary cases. If there is salary, I consider the income net of salary. Of course, Vrinda. Yes, step 1, this one, tax liability is this. Okay, kind means only if it is a case of partner having a salary, that income is taxable. If a partner having a salary, that income is some part is exempted and some part is taxable. That will be covered under your PGBP chapter. Section 40B deals with it. In case of partnership firm, if a partner receive a salary and some part is taxable and some part is exempted, it will depend upon the provision. Some part will be taxable under the partnership head as a disallowed expenditure, and some will be taxable as personal expenditure, personal income. That will be covered in section 40B and it will be discussed in your PGBP chapter. So do not take tension for that now. For now, you can understand the profit part, whatever receiving by a partner is exempted. Fine. Okay, Par saying, sir, integration provisions very easy. I told it's very easy. You need to apply in a systematic way. Just follow the format and every question will be solved. Fine. Next is Pooja is saying, yes, sir, you are right. If I'm not going wrong, include 2.5 lakh. It is easy. Just include 2.5 lakh, step number 2, or 3 lakh or 5 lakh. Do not apply anything extra. Do not think about it. Just follow step 1, follow step 2, and it will be step number 3. It always be correct. It will never go wrong. Okay, Rohan is asking, sir, please take a query session and tell us how to approach the paper. I need time for 1 hour time, and if board of study will allow me, I'll of course going to do that. You can write in your feedback form, and my board of study will consider it, of course. Okay. Why government not charge tax on agriculture? Jayapika, do not ask question like why. Why is a very dangerous word, and why government do this? There's a separate reason what we cannot discuss over here. Of course, there's some political reason. That's why it happens. Ganja and agricultural land, that is going to be taxed. That is illegal technically, but if you do that, then it's going to be taxable. That is not going to be exempted. Who was asking about the ganja? Anil Kumar Reddy, ganja. Okay. Okay, so now moving on to our last topic, that is special provision in respect of newly established undertaking in special economic zone, section 10AA. You can say there is some areas which has been defined by department as a tax holiday area or where tax advantage has been provided. So if you run any new business into that area, government has named that area as a special economic zone. You have the tax advantages there. So when government wants to develop any area, and if they ask people to come and start business in that area, start operating factories there, start operating services sector there, people do not come like this. So to develop any area, to promote any area, what does government do? Government say, if you establish your business unit in this particular area, what we have notified, then we will provide you tax advantage. We will not charge tax. We will not charge indirect tax also. So if that kind of benefit has been provided, then what the businessman will do? Businessmen will start their new undertakings in that particular area. For that, they can have the advantage of not paying any tax on it. Like Gurgaon has been developed so much. Noida has been developed. Ghaziabad has been developed because government declares some part of Gurgaon, Ghaziabad, etc. under the special economic zone category. That means provide tax benefits. So the businessmen run over there to establish their units, and that area is now, you can see that area technically has been developed a lot. So before 30 years before, 40 years before, 25 years before, these areas like nothing. Like Noida, Ghaziabad was not that developed. Gurgaon was like a gaon actually, but now they have technically been developed because of the undertaking has been established there. And why they have established there? Because government provides tax benefit after declaring that area as a special economic zone, etc. So section 10AA deals with it, that if you have a business unit in a special economic zone, then a certain amount of your income tax can be exempted from tax. But that is not that simple. There is a lot of provision you have to fulfill. There are certain conditions. If you fulfill all that condition, only that in that case, you will be able to get the deduction, get the benefit of this exemption under section 10AA. So let's discuss special economic zone, special provision in respect of newly established units in a special economic zone. Understand the word is newly established. There should be a new business. It should not be a old business. You have just shifted from somewhere else. It should be a new established. Assessee who can claim this deduction. Exemption is available to all categories of assessee who drive any profit or gains from an undertaking, being a unit engaged in the manufacturing or production of articles or things or provision of any services. So whether you are manufacturing some goods or you are providing services, both can avail the benefit of this. Such assessee should be an entrepreneur referred to in section 2J of the HEZ Act so and so, who has been granted a letter of approval by the Development Commissioner under section 15(9). The condition, the exemption shall apply to an undertaking which fulfills the following condition. It has begun to manufacture or produce articles or thing or provide any service in any special economic zone during the previous year relevant to assessment year 6-7 or any subsequent year but not later than 2021. The assessee should furnish in the prescribed form before the date specified in section 44AB, that is 1 month prior to the due date for furnishing return of income, the report of a chartered accountant. If you want deduction under this section, you have to file the report of a chartered accountant certifying that deduction has been correctly claimed. So that is also very important, because wherever any reporting requirement is under income tax, regarding any financial, regarding any deduction, the reporting requirement is only being certified by a chartered accountant. That means you in future, etc. So this was the example, of course. Period of deduction, that is really interesting. The amount reduction and the period reduction that we need to understand. If you are opening a unit in a special economic zone and you have fulfilled the other condition for availing the benefit. So the benefit is like, first says 100% of profit for first 5 years. So first 5 years, whatever profit you will earn, how to calculate profit, that is a separate formula. I will tell you later. So whatever profit you will earn, you can exempt 100% of profit under section 10AA deduction for first 5 years of business. In next 5 years, you can take deduction of 50% of your profit for next 5 years. So first 5 year reduction is 100%. The next 5 years is 50%. 50% of profit for next more 5 years also. You might be thinking if there is more 5 years, then it should be like 10 years, but it's a separate concept. For these 5 years, like for 100-year 5 years and 10 years, for this extended time period, for next 5 years, from next 5 years, there is a separate condition need to be fulfilled. It says, whatever amount of profit you need to claim a deduction, you have to transfer that amount in a special reserve. You have to create a special reserve. Like for example, you need deduction of rupees 25 lakh. Then 25 lakh rupees should be transferred to a special reserve that is called SEZRAR account. You have to transfer your amount to a special reserve account. If you transfer that amount into this special reserve account, that only, in that case only, you can claim deduction for next 5 years. Every year you have to transfer amount to that special economic zone reinvestment allowance reserve account. For example, your profit deduction is 25 lakh, but you transfer only 10 lakh rupees to that reserve. That only 10 lakh can be claimed as deduction under section 10AA. If you transfer 30 lakh rupees, that only you can maximum claim 25 lakh rupees. So for every year, for next 5 years, from 11 to 15 years, if you want deduction, you have to transfer the certain amount into that reserve, and the amount transferred to that reserve should be used within 3 years. Within 3 years, it should be used to purchase new plant and machinery for business. So you have to transfer the amount into this account, and this reserve should be used to purchase new plant and machinery within 3 years. If the machinery has been purchased, deduction will remain. If machinery not purchased within 3 years, then the amount not utilized in purchasing of that machine is going to be taxable. Like we transfer 10 lakh rupees, so you avail the deduction of 10 lakh rupees in this year. But within 3 years, you only use 8 lakh rupees for purchase of plant and machinery. Then 2 lakh will be taxable after expiry of 3 years. Same case, if you misutilize that amount, you transfer 10 lakh rupees amount and you took the deduction in current year. But after 1 year, you used this amount for any other purpose, which is not to purchase plant and machinery. You use the amount to distribute dividend. Out of this 10 lakh, you use 3 lakh rupees to distribute as a dividend, then 3 lakh will be taxable. So if any amount which has been transferred to the reserve, has been misutilized or unutilized. So misutilized amount will be taxable in the year of misutilization, of course, and the unutilized amount will be taxable after expiry of 3 years, because within 3 years you need to utilize it, and 3 years has been passed and you did not utilize it, then that amount unutilized will also be taxable after the expiry of 3 years. And if you utilize in a wrong way, then it will be taxable in the year of misutilization. All provision have been already written in the notes. So period reduction is very important. You have to understand for first 5 year 100% reduction, for next 5 year 50%, and for the last 5 year you have to fulfill the condition of transferring a certain amount to the special account. That only you can avail the last 5 year reduction. 100% of profit and gains from derived from the export of such article or thing or from service for a period 5 consecutive assessment year, beginning with the assessment year relevant to the previous year in which the unit begins. You can learn in short that for first 5 years, 100% of profit will be exempted as a deduction. From export, that is a formula I'll tell you, then you can calculate what is the meaning of that thing also. 50% of profit for next 5 years, and this 50% is important. 50% of the profit as is debited to the profit and loss account of the previous year in respect of which the deduction is to be allowed, and credited to the reserve account, that is called a Special Economic Zone Reinvestment Reserve Account, SEZ-RRA. I have written down SEZ-RAR, you should read it like this is the correct name, SEZ-RRA account, to be created and utilized in the manner laid down in section 10.10.10AA2 for the next 5 consecutive years. Condition to be satisfied to claim 5 year additional deduction, the amount credited to the Special Economic Zone account is utilized for the purchase of, I told you, machinery or plant, which is first put to use before the expiry of a period of 3 years. So you have to purchase new plant and machinery within 3 years. Until the acquisition, like till 3 years, you can utilize that amount for business purpose, but you cannot utilize it for these 3 purposes. If you used these amount within 3 years for this purpose, then that's going to be treated as misutilized and going to be taxable. Whenever you purchase the machine, you have to inform to the CBDT or you have to inform the income tax department by filing your ITR, income tax return, and with that income tax return, you have to furnish the detail that you have purchased the plant and machinery. So income tax plays a very smart move over here. They say that you have to purchase machinery within 3 years. So how we will come to know that you purchased machine or not? So when you will file return of income, and in the year in which you will purchase that plant and machinery, you have to submit the documents with your return of income. So what will happen if within 3 years with the return of income, the document does not reach to the income tax department, then department will assume that you did not utilize that amount or you misutilized it. So department will taxable that amount if they do not get the documents within 3 years with your return of income. The particulars as may be specified by the CBDT in this behalf have been furnished by the SASI in respect of machinery or plant. Such particulars includes details of the new plant and machinery, name and address of the supplier of the new plant and machinery, date, etc. with the ITR return of income. Consequences we have discussed. Has been utilized for any other purpose, that is misutilized, then it will be taxable in the year of misutilization. Has not been utilized within the expiry of 3 years, then it will be taxable in the year after the year when 3 years expire. How to calculate the profit? This is the formula. This section 10AA is for numerical purpose generally. In examination, its numerical question might have been framed. So the numerical will be solved like this. You have to read this and learn this formula. 100% of profit of 50% will be calculated after applying this formula. Whatever amount we will get after applying this formula, that amount 100 or 50% will be allowed as a deduction. The formula is profit of unit in special economic zone, the profit into export turnover of unit in a special economic zone and total turnover of unit in a special economic zone. What does it mean? Like if in question, first of all, let me tell you what is the meaning of total turnover. Total turnover means your domestic sale of that business as well as your export sale. Now, what is the meaning of export turnover? Let me tell you, assume that the profit of the unit is 80 lakh rupees. your export sale, suppose 400 lakh. Your domestic sale, suppose 600 lakh. So in formula, this is called profit, 80 lakh into. Now export turnover is a different term. Export sale is a different. Total turnover will be 1000 as per the formula. But export turnover and export sales are different term. Export turnover means whatever amount you remit out of your export sale, remit, you have received. You sold 400 lakh rupees export on credit base, and you received only 300 lakh remitted into India. The fixed date up to 30th September 2022. September of your assessment year. So your previous year is 21-22. Department has said whatever sale you have done up to 31st March 22. Out of that sale, whatever amount you have been remit into India up to 30th September 22 or the date specified by the RBI. So up to 30 September, we have remit 300 lakh. So this 300 lakh is called as export turnover. So what will be the formula? Formula will be like this: 80 into 300 upon 1000. So now this will be the exemption. Deduction is 24 lakh. Now, if it is an initial 5-year case, 100%, that means 24 lakh deduction on section 10AA. And if it is like after 5 years, then 50% of this can be claimed as deduction, that is 12 lakh rupees. So export sale and export turnover have different meaning. For denominator, we will consider export sale, 400 plus 600 total amount. For export turnover, we will take only that amount that has been remitted into India. It will be given in question. You just need to learn the formula. All information will be given. You have just to put into the formula and you will get the answer. That was the meaning of total turnover and export turnover. Clear? Restriction of the tax benefit, you need a chartered accountant report, etc. These are the basic provisions. You can read it out, of course. What the provision deduction allowable in case of amalgamation and demerger. If your unit has been amalgamated to another unit, then the new business will take the advantage of the deduction. The old cannot take the advantage of that deduction, whether in case of amalgamation or demerger. You can read it out. There's nothing special. This is the question. Like total turnover of unit A, 100. Profit of business A is 30. Export turnover unit A, 50. Total turnover of B, that is a domestic area, 200, and profit of B. So unit A is in SEZ. So we will calculate the deduction for unit A only. And that is 30 lakh is the profit. You can see it. Total turnover of unit A, that is 100, of course. And 50, that means 100, including export turnover. And what is export turnover is 50. So 15 lakh deduction will be there. So theoretical numerical provision of all this has been done. This is I'm telling you, this is the motto you should understand. Revise twice. That's my advice to make you wise. And it's just not for a quotation. It really works. If you've done this, you will see your result will be definitely very good. So there are some 1 or 2 things on need to discuss. These are test your knowledge, of course. So we do not have much time to test your knowledge questions because I need to take your MCQ test also. But these are the questions. You should always try whatever has been given on your study material, because examiner definitely going to ask you question of your study material, mock test, and previous year question. So do try them. That's my also request for you. Let me take the queries and then we will move on to our MCQ. So you should have your pen, calculator, and a copy with you to solve that MCQs. I'll start it. Let me see what is SEZ. I've explained what is the SEZ. SEZ are technically tax-free areas, tax-free zones where government provides you tax benefits. Nidhi is asking, sir, if we find any query after reading this chapter, then how can we ask from you? This is a good question. I do not have answer. Maybe we will see you soon again. Maybe some other topics Board of Study will allow me to take. And if it happens, I'll come again to you and then you can ask me, of course. Okay, Madhuri asked that. Now, state government change tax on agriculture income. They can if they want, of course. Goody is asking, sir, which individual tax rates to be considered for a person who is attaining the age of 60 years and 1/4/2022 for previous year 21/22? Goody is asking a very good question. It has been provided in a judgment. Of course, there is a new judgment for it, and it has been explained, clarified. If someone attaining the age on 31st March 22, he or she will be considered as citizen for previous year 21/22. Now your question is this: what if he or she attained the age on 1st April 22 of 60 years? Also, government has clarified now that even if he or she is attaining the age on 1st April 22, even for previous year 21/22, he or she will be treated as a senior citizen. So whether your birthday is on 31st March or on 1st April, in both cases, you will be treated as a senior citizen for previous year 21/22. So your question, yes, that person will be treated as senior citizen for 2021-2022. Okay, Rudy? Okay. Again, Shanta Shri asking why Sikkimese individuals are exempt. Do not ask why. Why is a very difficult question to answer. Oh, why sky is up, why earth is down, why? Okay, why I am here, why you are listening, these all have very difficult to answer. I have answered the ganja case, of course. Dubey, why are you asking again me the ganja case? Okay, after 15 years, business entity will be charged normally as there any business activity. Yes, of course, after special economic zone notification has been ended, the deduction has been over, then this deduction you cannot claim. Then normal tax provision will apply, of course. Next, why it refresh automatically? Okay. What if the ganja? Why somebody is asking about the ganja case again? Rupesh asking rebate from advance tax or TDS. That will be discussed in advance tax or TDS. Please ask this query to the faculty who will take a lecture of TDS in advance tax. Okay. Have a good day. Do not go anywhere. We are going to take an MCQ test. Where are you going? Do not go. We will have a good day. Of course, just stay with me. If in future we have to ask 100 or 50% special economic zone is whether comes under deduction or exemptions. Deduction, of course. Sir, can I ask question from first chapter? No, not now. We do not have time for that, Nidhi. Shraddha Dikshit, and one more topic is there in study material restriction and liability of expenditure 14A. No, this is not covered for me, of course. Okay. Sir, in number one, the way explained answer need to represent the answer in the same manner. Do not use you cannot use the same words as explained in study. Of course, you can use your word, but the interpretation should not be changed. 730 days question. Yes, Rahul, let me solve it. Of course, just give me a minute. Okay, no other queries. If reserve amount is utilized for other than 3 purpose mentioned also, you can use the reserve amount for other than 3 purpose also, but that must be your business purpose. If it is a personal purpose, then it's going to be taxable again. Fine. So Mr. Rahul Gandhi, your name is Rahul Gandhi, we have to answer this, of course, is asking about the doubts of less than 730 days. I don't know what is your doubt, but let me imagine what you want to ask. Let me clarify it, then we will move on to our MCQs. So Mr. Rahul Gandhi, if an individual who became resident, then we have to find it out whether he is a ROR or he is a RNOR. Then it says that if you are in India for less than 730 days in 7 PPY, or you can understand it like this: if you are in India for 729 days or less, both are same meaning. That's a grammar, that's the English, you can use it like anyway. If I say less than 730 days in 7 PPY, or if I say 729 or less days. Or second condition we all know, so you have a problem with only first condition, non-resident in 10 previous year, of course. So this condition, you have a problem. So with an example, I can tell you how you can see it. Like Mr. A visit India, he is a foreign citizen, visit India for 200 days, in previous year and he was in India in last 5 years, 100 days, 150 days, 100 days, 0, and 100 days, respectively. Before this, he was never in India. So now we need to find the residential status. So because he's a foreign citizen, so we have to apply both condition. In previous year, he was in India for 200 days. So he fulfilled first condition and he will be a resident. Fine. Now to find it out whether he's a RNOR, we need to find out whether in last 7 years, he should be in India for less than 730 or he's in India for 729 or less days. So in last 7 years, he was only in India for last 5 years information has been given. So in last 5 years, he was in India for 100 plus 150, 250 plus 100, 350, 0 and 100, that's 450. So in last 4 years, last 5 years, he was in India for only 450 days. So he was in India for less than 730 days, or we can say 729 or less. So he's fulfilling this condition. So he will be called a resident, but not ordinary resident. We need not to check any other condition like 9 years or 10 years because he just fulfilled first condition. I hope it's clear. Rahul Gandhi, we will see to it again. So I am starting an MCQ test. Please do get ready for it and we will solve it as in a rapid manners. This is test day 5. So I've just shared the screen of questions, chapter 3. So I hope you all are clear there. Are you ready? Okay, so this is question number 1 for you. Please answer it and do it fast. We have only 10 minutes to complete all this. Question number 1 is, which income from land which is situated in India and used for agricultural purpose will be treated as agricultural income? Let me see how sincere you are in your studies, because this is only, I guess, first time in our session in this batch. We are taking MCQ on the same day we read that chapter. So we will see whose IQ level is better than others. Fine. So which income from land which is situated in India and used for agricultural purpose will be treated as agricultural income? Rahul Gandhi is saying, yes, sir, it's clear now. Very nice, Rahul Gandhi. Thank you. Okay, so the correct answer of question number 1 is, okay, students have start sending me the answers. Somebody is saying say, Rohan Jain is saying B, Shresht is saying C, Khushi is saying C, okay, Dubey Sunil is saying C. The correct answer is C, any rent and revenue. So both will be treated as agricultural income. The correct answer is, of course, C. Next question. Income from farm building is exempt if fulfilling following condition. The building should be on the immediate vicinity. Read the options and send me the correct option. Question number 1 answer. Okay, Kiran is asking, sir, crop insurance received taxable or not? Crop insurance received is taxable or not? Generally, under income tax, only those insurance, those are covered under life insurance, is exempted under section 1010D. So crop insurance does not fall if under section 1010D, that is going to be taxable. And if it is included, then it's going to be exempted. So whenever you are taking the policy of this insurance, you have to see the insurance paper. If those have been exempted or it is written, and it is called section 1010D, then only it is going to be exempted. Okay. Generally is going to be taxable, of course. So question number 2, I am waiting for the correct answers. Okay, so question number 2, correct answer is D. Of course, these all three conditions should be satisfied to claim your farm building rent as an agricultural income. So Sushil is saying D, correct. Shresh Jalan again saying A, wrong. Sumanpreet Kaur is saying D, correct. Very good, Sumanpreet. And Mohit Chaudhary is saying C, wrong. Madhuri is saying A, wrong. And Prasanna Hari is saying D, correct. Good. Question number 3. Integration provision apply if following conditions fulfill. Integration provision apply if following condition fulfill. What is the correct answer? Yeah, send me fast. Hitesh saying D. I told you, please kindly write out the question number also when you are sending me the option, because due to network options, answer comes late. So might be I'm on question 3 and your question number 2 answer is coming. So please write it down the question number and then paste your option, of course. So Kanishk is saying D, Parth is saying D. The correct answer is of course D. Very good. High five from Wi-Fi. Question number 4. Rebate under section 87A will be allowed in case of integration on the basis of. Rebate is allowed on the basis of what? Rebate under section 87A will be allowed in the case of integration on the basis of non-agricultural, agricultural, both agricultural, non-agricultural, or D, that means none. Question number 4. What is the correct answer? For example, you have agricultural income 20 lakh and your non-agricultural income say 4 lakh. You are an individual and resident 45 year of age. Now we need to apply integration provision. First step will say calculate tax on 20 plus 4, 24 lakh. You need to calculate tax. No rebate provision will be applied. Rebate will be applied in step number 3, after step number 3 only. Step number 2 will say now calculate tax on agricultural income plus exemption limit. That means 2.5 lakh. So now calculate tax on assuming your income is only 22.5 lakh. Now step number 3 will come. That is difference of tax of 1 or 2. Whatever it is. I'm not calculating it due to the time shrink. So whatever it is, now I'm telling you whether rebate will be applicable or not. The correct answer is of course non-agricultural income. That means option A. Now you will see in this question, our non-agricultural income is 4 lakh only. So now whatever tax will come over here, now we will provide the rebate under section 87A. Now we can deduct the amount of tax, that is 12,500 of rebate amount. So rebate is applicable. Why? Because agricultural income, not non-agricultural income, is less than 5 lakh in this question. If non-agriculture is 6 lakh, then we cannot apply for rebate. So now we will apply rebate like this, and whatever amount will come, now we will apply 4% cess. So I will write down the example how we need to calculate the rebate in case of agricultural and non-agricultural integration case. I hope it's clear. So okay, question number 4 answer has been come. The correct answer was of course non-agricultural income. A lot of you have answered me correctly. Very nice. Well done. Question number 5. In case of growing and manufacturing of tea, what will be the proportion of non-agricultural and agricultural income? So it's a very simple question, of course. It's a very, very easy question. So in that case, I'll not take much time. I'll answer you the question. The option correct is B, 40% and 60%. I will try to solve those questions which have a numerical treatment. Compensation received on account of disaster is exempt if received from, we know that, any trust, charitable, anybody, or central government, state government, or local authority. Correct answer is D. We all knew that. I am skipping this question also. Now this is A question we need to solve. Question number 7, that is important. I need answer of that question. Mr. Suresh, age 45-year resident, has non-agriculture income of 650. Agriculture income is 50,000. Now compute tax payable by. So first we have to calculate tax on 7 lakh rupees. I am telling the process. Then you need to calculate the tax on agriculture income plus 250. That means 3 lakh rupees. And then you apply the rest of provision. I am waiting for the answer of question number 7. Let me see who can answer that question. Firstly, this is a question you need to solve. So question number 7 answer I am waiting for. Let's see who are the first one who is going to answer the correct. And whenever we ask for tax calculation, that means final tax calculation. You have to calculate the final tax. What is the final tax? I need answer of question number 7, which is the correct option. Question number 7, correct option I want. Parth is answered me B. Okay. Harsh Goel saying B. Okay. Rajni is saying something else, which is not an option, of course. Anirudh saying B, Saurabh saying B, Anirudh saying B, Madhuri saying B, Vivek saying B, Anirudh again say B, and Parth also saying B. Correct answer is B, very correct. You have to calculate education cess also. The correct answer is 52,000. Well done. Question number 8. If non-agriculture income is 252 and net agriculture income is 40,000. Then tax liability of an individual assessee aged 40-year resident will be question number 8. Solve it. What will be the tax liability? Do it fast. What is the correct answer of question number 8? Almost all of you have given correct answer of question number 7. Well done. Very, very well done. The correct answer of 8, Parth has given the answer, that is A. The correct answer is, of course, question number 8 is A. Very well done, Parth. Congratulations. Question number 9, that is for section 10AA. Please try it as soon as possible. And the formula is very simple. I have told you the formula is profit of the business into export turnover upon total turnover. So you should apply it and tell me the answer. So I am asking the section 10AA benefit if this is the 4th year of business. So 4th year of business means 100% of that formula amount will be allowed. So you need to find out that as per formula, what will be the amount which is going to be allowed as section 10AA benefit. So business profit is 50, of course. Business profit is 50. Export turnover and total turnover. Question number 9, correct answer is B, 40 lakh. You will be, of course, finding a solution. So question number 10, maximum tax holiday 100% section 10 double in respect of newly established units in SEZ allowed for a total period of, the correct answer is 15 years. You can claim deduction up to rupees 15 years in a special economic zone. So question number 10, correct answer is C. Sorry, the correct answer is A, 100% tax holiday. Total is for 15 years, that is 100, 50 and 50%. So if somebody is asking what is 100% tax holiday can be claimed under section 10AA, then the correct answer is of course option number A, and that is 5 years. So you can claim deduction up to 5 years of 100% of profit. Very good. You are answering almost, you answer almost all questions correctly. Most of you, of course. So that was our MCQ part, and we have completed our chapter number 3. So keep studying like this, be sincere for it, and I personally believe that if you will continue studying like this and sincere, you will be a chartered accountant very soon. Believe me, please revise your subjects, and at least revise the subject 2 months before the examination. If examination is in like November or May, then you have to complete your subjects revision up to at least by the end of March. If you will do it, if you're able to do it, then you will definitely have a very high chances of clearing the group. If your any classes running even after March, then try to complete those chapters, those subject wise revision, those subject has been completed, revise them twice, and the classes is going on continuously, then just revise the chapter you have completed in your classes. So that can be kind of a revision you have to do. Those classes are running, but anyhow you have to complete your revisions twice before the day of examination, before at least 10 days before the examination, or 1 month. If it's not possible to complete it before 2 months, at least for those subjects, those classes have been completed earlier, revise it before at least 2 months before the examination date. Those classes running, try to revise them as the classes are running, continuous process. So at least before examination 15 days, you have to revise it at least once or twice. So if you're able to do that, I'll definitely believe that you all going to succeed in your examination, and you will be really going to be a CAS very soon. So my all best wishes for you, and I hope we will see each other again in some other income tax topic in intermediate or maybe in final, of course. And I'll be really happy for your results. All the best. Good day. Take care of yourself, and take care of your family, and take care of your studies, because this is the only way you can complete your goals in your life. You can achieve your dreams, and trust me, there is no future in any job, but the future lies in the person who holds the job. You are the person, you are the future. Believe in yourself, be positive, study hard, never lose hope, because that's the only thing which can promote you, to encourage you to achieve your goal. Always imagine that you will be a CA after 3 or a 2 or a 5 years. So please dream big, stay positive, work hard, and be a chartered accountant. Take care. All the best. So our session is completed, Mr. Ram. Thank you, Mr. Ram. Thank you so much. Ma'am, कुछ कह रही? Conclude, done.